Hey traders, it's Hima here, and I've got a chart of the week looking at how to make the most of a stock split. Today's Monday, August 31st, 2020. Now, before we take a look at the markets, important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. So, how do you make the most of a stock split? Maybe you already had a position in the stock and it's split, but you got to redo your analysis. Or maybe you were looking to enter that market and then kind of got caught off guard when it decided to do a split, and so you have to redo your analysis. Either way, you got to look at your charts again, and you've got to readdress a few key factors. So the first is to note the key levels and findings from before the split. So I'm not talking about getting a time machine and jumping back, guys. I'm talking about when you are trading a few stocks. Okay, say you are a specialist, you have a few stocks you trade pretty actively, and you've been watching them. Keep detailed notes of the key levels and forecasts you're finding so that if the market chart were to disappear from you, you could still recreate it. I do that by writing them down in my Skinny Markets Outlook. Right? So in the example here, we're going to talk about Apple. We're just split into today's session. You're going to see how I took key levels from the pre-split analysis and translated them over. Then you want to check the newly priced stock for notable price action, market timing, and momentum setups. And the part that's not in here is I want you to do it in this order. Price, time, momentum, as we reviewed in depth in last week's monthly group coaching live, that's the order, that's the priority of my trifecta. And then lastly, be patient for a trade opportunity that fits your risk reward and trading plan. Here's the thing about stock splits, guys. Once you see that very expensive stock fall, right? Maybe it's a quarter of the price or a third of the price. It can be very appealing to want to take action and buy it simply because it's cheaper than it was a couple days ago. That in itself is not a reason to go long after a stock split, all right? So be patient for an opportunity that actually fits your trading plan. And I'm going to show you what I'm seeing that would have me interested in taking action in Apple. So let's take a look at the chart to see how this all comes together. So here's a really squished up daily chart of Apple stock. And I'm showing it to you this way because this is what the chart looked like this morning, all right? It had all this leftover analysis, forecasting tools, and momentum observations and price analysis all sitting in outer space because now Apple's not in the $300 to $400 range. It's down in the $120 to $150 range. So we have to redo the analysis. And again, step one is to do it based on key levels and findings from before the split. So let's ignore the outer space stuff. You don't even have to delete it. Just get it out of your visual space here, okay? And come to the latest price action. Now, your brokerage should automatically adjust the prices on your charts. Make sure that you are doing analysis on the new post-split pricing before you continue in this step. Now, you can see here that I have used a projection tool and I have an upside target for Apple of 131.93, again, based on its new prices today. How did I know to do that? Well, I actually went back and looked at the analysis I conducted before the split to see what were the main sources of my key levels and how had they behaved. And because I do this every quarter in depth in the Skinny Markets Outlook, it was easy for me to refer to. So I just recreated the analysis based on that tool to find my next resistance, and I can do this to find even more. As for support, I looked at the price action that I had been observing on the daily chart up and through last week, and I looked and found that the same high or low was significant from August 11th. It's just now at a different price. All right, now we look at the newly priced stock for notable price action, market timing, and momentum setups. So right here in terms of price action, what I see is that we're essentially consolidating beneath the August 24th high. And the cool thing is that this pink line, all right, is the result of forecasting. And that pink line is representing market timing for a high based on this new world order for Apple. So it's pretty cool that there was a high on the day I expected it to be. I also did forecasting analysis looking at when we should form a tradable low. And that came in for Thursday, August 27th. Now, we did have a low. It hasn't yet led to a big, huge move higher. But this is where doing the forecasting analysis even in retrospect, starts to get you familiar with the cycles navigating the newly priced stock. In terms of momentum, you can see how we've creeped up to the bull resistance power zone and the RSI power zones several times on the newly priced stock, held support at the bull support power zone beautifully. Okay. Now, as I mentioned in today's skinny report on the ES and NQ, it's really important for you to be able to identify setups in the RSI power zones itself. I teach that in the 4 zones RSI coverage system, and I'm inviting some of you to a special training where I'm going to go into that live in depth, so keep an eye out on your email for that invitation. Now, coming back to the markets here. So we looked at the price, we see the uptrend in place. I talked about consolidation. We know that we were just having timing for a low, so we're on the path to trade higher. And momentum is overbought, but not showing any signs of necessarily fading out. So now the last step, be patient for a trade opportunity that fits your risk reward and trading plan. For me, when I'm up near the RSI power zone's overbought zone, the bull resistance power zone, I like to see low risk opportunities to go long, where I can put a protective stop very close. So at the bare minimum, I would like to see today's session close above the August 27th high. That's 127.49. To even think about going long. Better yet, I'd like to see a daily closing break above the August 24th high at 128.79. So that's it. So unless either of those things happen, I'm not that interested in Apple right now. And it, in fact, could end up consolidating more, pulling back. But again, I know my key support to watch. So I know that even if there is a pullback, if we stay above this August 11th low at 109.11, there's still room for bulls to come back in, take control, and resume higher. So there you have it. Now the breath can return to your lungs. You don't have to worry about how messy and weird your charts are. You can still keep the old charts, keep that old analysis. It's not going to get in the way of your charts as time unfolds, right? But make sure you follow these steps to be best prepared for new opportunities in a stock after split. All right, catch you next time. You can sign up at himaready.com/gift to get my hot, timely, actionable updates as soon as I publish right to your inbox.